Can you hear me now? Yeah, normally you should be able to hear me now. As always, this live is going to be in English. If you want live in French, you should come tomorrow. Du coup, comme j'étais en train de dire rapidement en anglais, mais en gros, le live aujourd'hui, il est en anglais. Demain, on va faire le live en français, donc n'hésitez pas à revenir demain. So, to start again, what I was saying, basically, it's live by Dubai Trading Academy. It's for educational purpose only, and it does not constitute financial advice. You are responsible for your own trade and should be aware of the risk and take them in consideration while trading. So today's live is going to be divided in several parts, like always. First, we're going to take a look at the latest economic news. Then we're going to look at the economic calendar and see what are the important economic publications of the week. Then we're going to take a look at the different asset class. And we're going to have a deeper focus on the Nasdaq 100 future. And then we're going to talk about central banking, because next week there's a lot of meetings of the main central bank. So we're going to be reviewing a little bit what is central banking, how does it work, and what is the goal. So if we look at the economic news, mostly there hasn't been a lot, but amongst the few that were there was the poll by Reuters that said that basically the Bank of England should keep this rate at 5.25 on December 14 and through the second quarter of 2024, so there shouldn't be any rate cut until June 2024. We're going to explain in more detail, the goal is to control the inflation, and like in October, the inflation was at 4.6 in October, while in September it was 6.7. So it's progress, but it's still not the 2% goal that usually there is, that of the inflation of the central bank. Then another news was China published a lot of statistics this week, and basically their weak trade data signal more economic problem ahead. Like their import unexpectedly shrunk in November compared to last year while they were in COVID, and export went a little bit up but from very low base, suggesting that the nation's slowing economy still hasn't bottomed out. So there's still more going downward. Import in dollar declined 0.6%, like I was saying. And the economic consensus forecasted a 3.9% gain, so that was way worse. Moreover, overseas shipment rose only 50 basis points from a year ago. Meanwhile, a year ago they were in a full COVID lockdown. So that's still pretty bad news. And also, we've talked about it a bit before, but we're gonna, it's getting more and more official. The BOJ is set to end historic negative interest rate policies, because they've been having a negative interest rate for more than a decade, and there's more and more official from the Bank of Japan, especially Kazuo Ueda, who is the governor of Bank of Japan, and said that they're going to scrutinize the strength of domestic demand and next year wage outlook to guide monetary policy, and basically to say that they were not closed, they were still open-minded to the idea of raising the interest rate to positive territory, which, like I said, hasn't been seen in a decade. So that's still quite a lot of, that's pretty big news. So if we look at the economic calendar for this week, let me put it on the screen. So we can see first that there's no speech from any official from the central bank, the Federal Reserve, because since their meeting is next week, they're not allowed to have a speech. We can see also here that there's actually next week a lot of meetings. There's the Central Bank of Russia, even though it's not that relevant, the Central Bank of Brazil, even though we are not really interested, but still. But mostly there's the Fed, the ECB, the BOE, the Swiss National Bank, and the BOJ is coming pretty soon afterward. So since that, there's not going to be a lot of speech by official this week because they're not allowed to speak, except apparently European one, 2 weeks before central bank meeting. So on Monday there was not a lot, the German trade balance, but that's it, and like a lot of speech by ECB official because, like I said, they wanted to speak before, they were not allowed to do it anymore. Then on Tuesday we had the Tokyo core CPI, which was worse than expected, so that's a good thing. And we had like a lot of PMI, European PMI, that were like better than expected, but still below 50, which indicate a contraction of the economy. And also we had US PMI that was the same as expected or slightly better, but all were above 50, so that's sign of an expanding economy. So that's pretty good. That's a good indication, like a good sign for a good signal for the American economy. On Wednesday, we had the November employment statistic with the JOLT job opening. No, so that was Thursday. Sorry, Tuesday. We've got the unit labor cost, the non-farm productivity, and the non-farm employment change. We also had the trade balance for the US that was worse than expected and still negative, but that's not big news. Thursday, we had the China export and trade balance. And then we had some German and European news, like statistic, like European GDP. That was actually, that's today. So we had German, the Eurogroup meeting, the European GDP, and jobless claim and continuing jobless claims, and that were better than expected. So it's a sign that the job market in the US is still pretty strong. And tomorrow there's a lot of statistics. We've got some Japanese one during the night, some the German CPI, and also like a lot of US labor statistics, as well as Michigan University expectations. So tomorrow is a big day for American market, and the market will be waiting to see what are all the statistics. What are the statistics in order to anticipate and to react. So then let's look at the different asset classes. So if we look at the indexes, we can see that Europe is slightly in the green. Asia, Japan, and China are a lot in the green, but otherwise European index are more or less in 0.2, minus 0.5, 0%, with the FTSE slightly above. And otherwise, we can see that in the US, every market, every index is like the stock equity index open in green. So that's pretty good. That's a sign that maybe today is a day where you need to go long, but still it's not sufficient. You need to have more information to be able to make investment decision. Then if we look at the bond, we can see that the yield, especially US one, went all went down except the 10-year that went slightly up, but they are still way lower than a previous level. So that's quite a lot of signs that the market is starting to buy, like actually it's a sign if we look at the 10-year, but I've explained that last time, but I'm going to re-explain it because I think it's quite important to comprehend that basically the market decided that at a 5% interest rate yield with no further rate increase by the Fed, then it would be interesting to start to buy some US 10-year bond and to switch the trend that was actually people were selling bond and now they started to buy them back. Then if we continue quickly we can see that the steer, like always, are not very volatile. The Eurobond is slightly higher. Okay, so they're done for maintenance, but not so much, because if you look like on a monthly time frame, you can see that the Eurobond price is going up. Of capital is getting higher and higher. Then afterward, like the sovereign de Sonia are not very extremely volatile, but because they're basically quoted only daily. And yeah, this one is struggling a bit monthly actually, and you can see that it to go up. If you look at the euro dollar, we can see that we are now at 0.7, so that's quite a big drop since last week where we were at 1.10. Let's yeah, okay, maybe 2 weeks ago. No, actually middle of last week we were at 1.10, we are now at only 1.7. But we're still at a higher level than the previous low, so so far we won't say that the bullish trend has been reverted, and as long as we don't reach below 1.65, 0.065, we are still in a upward trend. So we are gonna keep it like we're gonna consider it still in an upward trend, and then we're gonna see if we reach those levels. Then we can start to consider that there has been a trend reversal. Then, and if you look at the WTI or the Brent, we're going to look at the WTI because except the $5 difference, they're more or less the same. We can see that we are still on a downward trend, so that's actually kind of good for inflation data and everything else. So that's most of it for the different asset class. I will quickly look at we were going to talk quickly at the gold. We actually came back from last week peak at $2,200 an ounce. I think it was last week. Yeah, 2150. It was last week at 2150, and now we are back around like 2000. The level that's been maintained by China, to summarize. So that's basically it for the different asset class. So now let's look at the Nasdaq. I'm gonna bring you the Nasdaq on this screen. I will probably not trade today because I've already reached my daily loss limit. So and I shouldn't be trading. Otherwise, I'm gonna end up blowing my account. So let's take a weekly time frame, no, 4-hour time frame, to first have a look in general, and then we're gonna funnel into a slower time frame to have more precise view of the movement. So if we look from a bit of time, like we can see that we've it's last week. Yeah, during last week we've made a new high compared to for 2023, and since then we were like in a range. We've reached the level below, and since then we went down. Yesterday we went 2 days ago we went up, and yesterday we went down again. And today we went up on our lowest point was higher than yesterday, than previous low. So we need to, we're gonna see how the market's gonna evolve. Like I said, we still haven't made a newer low. On top of that, we can see that there's been several weak shadow. Week is a literal translation in financial market. It's shadow that have went to lower level, like somewhere here and before also, and therefore if we wanted to take a short, we wouldn't take it before this level, so we would take it somewhere there. And if we want to take a long, we could probably have taken it at the candle break here. I don't know if the image is still transmitting, but I'm gonna continue like it is. So now let's look at the 30 minutes. On the 30 minutes, we can see that since the open this morning, the market's been going up with a big increase at the publication of labor statistic here. So that's quite a signal, and then a big volume from the open until now, even though we might have some delay depending on several factors that there's not necessarily a lot of need to elaborate on. So yeah, we are now on the 5 minutes. We can see that at the open it went up, and now there's been some small correction. And but since then it went back, and we will now wait and see how it's going. To be fair, my expectation for today was probably a short, but then that was this morning, and since then the market showed me a different, sent me another signal. So probably I would take a long somewhere around, let me see, yeah, somewhere around the 16,000 up until 16,050, something like that. But we are not there yet, and like I said, today I've reached my allowed daily loss, so there's no trading for me today because I don't want to blow up my account. So that's more or less it for the analysis of the Nasdaq. So now let's talk. We're going to talk a bit about central bank. So yeah, Walid is arriving, but you can see I don't need to go open to him. So like I said, ahead of next week's central bank meeting next week, we thought it would be interesting to do a reminder of what they are and how they work. And on top of that, we've had some questions about this, like why do we keep talking about them, what it is, how does it work. So we thought it would be interesting to try to answer them. So the first question, and the most basic one, is what is the role of central bank? So a central bank serves as the cornerstone of a country financial and economic framework, with its primary role revolving around the management and regulation of the nation monetary supply and credit conditions. So monetary supply is basically the amount of money that is circulating inside an economy, and credit condition is at which rate you're getting access to credit and stuff like that. So the bank are getting access to credit. So they have several tools that they use to do that. So the main one is interest rate, open market operation, and reserve requirement. If they require the bank to have more reserve, then the bank are then introducing less money in the economy. If the interest rates are high, it's the same idea. And also, if they buy and sell securities on the open market, they're gonna put some money or put some security and remove some money from the total monetary supply. Also, central bank take charge of issuance and management of a country currency, and they also have the responsibility to do to supervise and regulate commercial bank and other financial institution. This oversight aims to maintain the stability and integrity of the financial system. You can see an example. We saw like a big example of that during the 2008 financial crisis, where basically the central bank of the U.S. central bank basically, excuse me, a second, I need to do something. So, like I said, so we could see that in the 2008 crisis, where the central bank orchestrated the bankruptcy of Lehman Brothers and the buyback of several investment banks that were in difficulty in order to ensure the financial stability of the financial system. And then also sometimes a task. No, we don't care about that. And also the task of managing the country foreign exchange, the exchange rate. For example, sometimes they're gonna buy currency in order to maintain an exchange rate that is favorable for them, or sometimes they're gonna do like the opposite. And sell currency to maintain, depending on what is their objective. And then afterwards, they also in order to make those decisions, they're going to engage in rigorous economic research and analysis to understand the different economic trends and make the proper decision because they have a strong influence on the economy of a country. Therefore, it's quite very important for them to do strong economic research. So then how do they control the central bank, the money supply? Because like I said, that's that's actually their main job. Their main job is to control the money supply. And to do that, like I said, there's several tools. But the main one is the interest rate, because then it allows them to have a proper understanding of how the economy is. Sorry, the interest rate, because they. Yeah, sorry, I'm thinking of something up. So, by basically adjusting, I'm taking my spirit back up. By adjusting the benchmark interest rate, often known as the policy rate, they influence the cost of borrowing, and in turn, for banks, and then those banks are going to reflect that change in borrowing cost to consumer on the open market. So therefore, if it's harder to borrow, it's more expensive to borrow money, then there's less money circulating, and on the opposite, if the money is cheap, then there's more money circulating. So that's why the interest rates are a key tool to reduce the money supply or stimulate the monetary policy. Another key instrument is open market operation. So that's what we call quantitative easing and quantitative tightening. That's what we call quantitative easing and quantitative tightening. Because quantitative easing is the fact of buying securities on the open market, which will then generate, which will remove security from the open market, but then add money into the market. Then another one, and that's quantitative easing and tightening, the act of buying or selling securities on the open market. Another one is the reserve requirement. I've talked about it before, but if the reserve requirement, it's basically the amount of money the bank needs to hold in reserve. If the bank needs to keep more money in reserves, they're gonna then lend it less, and otherwise, if they need more, they're gonna lend it more. Therefore, increasing the economic activity, or decreasing it. Also, they can do some forward guidance where they say in advance what are the economic expectation, and therefore allowing them to decide whether or not to weather expectation, and therefore help the investor and the financial market to make to adjust its decision to the economic condition. And then also, like I said before, one of the main roles is to ensure the financial stability. So how do they do that? Basically, they try to identify, mitigate, and address risk that could jeopardize the smooth functioning of the financial realm. So we saw that we have several pretty good examples of that. We had the 2008 crisis, where they basically took all the banks together and made them buy each other and figure out a way to avoid like the global financial meltdown. We also saw that in March 2023 with the crisis of regional bank, where basically they strongly vehemently asked the different market participants to buy the regional bank in distress in order to keep maintaining the financial stability. And and they basically try to have a proactive stance and save and prevent financial crisis. So they also, to do that, they will also use communication and collaborate with different banks. Then another question is, how do they interact with other financial institutions, such as the government or the bank and everything? It's a complex way. Basically, to the government, they are fully independent, but they act as an advisor, providing insight, recommending economic policy, but they are completely independent. That's something that the creator of the Fed, which were Lehman Brothers, Goldman Sachs, and some other guy. I think Morgan Stanley, like some of the big bankers at the beginning of the 19th century, 20th century, when they created the Fed. Basically, they forced really hard to remain independent, and so that the government, so they can be excluded from different political conflict. And some other might say, in order to be able to do whatever they wanted. That's two schools of thoughts, and it's difficult to say was right. We are not really in their head. And one of the last main interaction is that they will act as a lender of last resort, or also lender of last resort to offer emergency liquidity to banks who are in financial distress, in order to protect them from bankruptcy, because bankruptcy is extremely problematic for the consumer and the everyday citizens. Okay, so that's most of it. While I was talking and losing my word earlier, that was because I was basically in a trade. So I took a short, basically here. I sold here, but the good entry would have been here. Basically, I was playing two things: the breakout of the resistance, as well as the breakout of this line, of this resistance here, that was valid before and after. And I sold around this resistance, because this support, because I thought it might break it might bounce back at this level, but we can see it bounce back lower, but then it bounce back, and so in the end I'm quite glad with my exit around here. So that's basically all for today. Like I say, I'm not gonna take another trade or anything. So I will see you tomorrow for the